Buddy, it is Brian Shannon from AlphaTrends.net. Today's Friday, the 17th of March, 2017. Hope you had a good week of trading. Let's take a look at the numbers here. You can see the star next to the SPY. That's because the market was not actually down 139 today. It was down 35 cents. The numbers are not adjusted for a dividend that it paid today of $1.04. So keep that in mind. The SPY was actually up this week, as was the Nasdaq, the Russell, the semis. Biotech's lost ground, and we'll talk about those shortly. And the oil bounced back just a little bit, but let's take a look at the market here. Here's a 30-minute chart of the S&P 500 SPY. What we're going to do instead, though, is look at the SPX because it does not have that dividend adjustment necessary. So we continue to remain above this prior band of resistance, which is so far holding as support. So let's just drill down on that on a 15-minute time frame. And you can see that we're above the rising 5-day moving average, and this prior resistance is holding as support. So next week we'll want to see this 2375 level hold in the SPX, and if it can do that, then it continues to be innocent till proven guilty. Breaking below that and then being stuck below the 5-day moving average, we would then look for the possibility of coming down towards maybe 2350, though. The overall trend is still higher. Broken resistance tends to act as support. That's where we are. So we still give this market the benefit of the doubt to the buyers. The Nasdaq gained some ground this week, and that would make it an all-time closing high on a weekly basis. You can see we're still in a major uptrend here, higher highs and higher lows on this Nasdaq 100, and we get down to a 30-minute time frame. What we want to look at here is this trend line. It would be something we're going to keep an eye on, and obviously, or maybe not obviously, but this prior little band of resistance is so far holding support, and that does come with a rising 5-day moving average as well. So we really would like to see maybe 131.50 hold. If it can hold there, then we will continue to give the benefit of the doubt to the buyers. But if we see something like this happen, and then in particular this 5-day moving average starts to curl over and act as resistance, then I think a test of that trend line would be next, down near 130.75 to 131, and we will deal with whatever comes from that, after that, as it emerges each and every day. That's what we talk about in these end-of-day videos for subscribers every day on Alpha Trends, that is. Anyways, we remain in an uptrend. We're innocent till proven guilty. I would say that we're extended, so we want to still be cautious here and be ready to move to the sidelines if the market tells us to. Otherwise, continue to give the benefit of the doubt to the buyers. The Russell 2000 gained some good ground this week, and this market has been one that is drastically underperformed this year. We're looking for the possibility that we come down and test this prior important level where we also have the volume weighted average price since the election right here. So that's what that purple line is. We're back above a 50-day moving average. That's good to see. We're above the 10 and 20-day moving average. That's good. We're above the rising 5-day moving average now. The issue here is that we've gotten just a little bit extended the last couple days. So, if we're to pull back a little bit and test that 5-day moving average before we continue up again, I think that would be fine and in fact healthy for this market. But right now the buyers are in control once again. Semiconductors show how persistent a trend can be in this market. They closed up 16 cents today, which is once again another new high for the last decade or so for the semiconductors. So this group continues to just stair step higher. We've got prior levels of resistance holding a support resistance. We would look for support down near 78 and a quarter. If we drop down to that level, not a big deal, but if we drop down and hold below it, then we have to look at it a little bit more cautiously. The disappointing action in the market this week came from the biotechs. It looked like this group was going to be able to clear this prior high at this point here and be able to continue to move higher. Instead, what we saw was the market did rally up to that level, was quickly rejected, and that came on the heels of a real negative move in Biogen on Thursday, and then and Amgen today. So a lot of underlying weakness in the individual biotech stocks, which tells me they're probably going to need some more time to heal. And now that we're back kind of into this range right in here, and we can see, let's just back this into a 30-minute time frame. You can see these trend lines that I drew in, and we broke that and this first level of support. Now this is where, if we're below a declining 5-day moving average. So that tells us that lower high and lower low below a declining 5-day moving average. This market's going to either need to find some support in this area. This is going to be an important level to find support within a point or so. Otherwise, it looks like it could be headed for further decline, perhaps down even towards that 50-day moving average. If we take a look at the year-to-date volume-weighted average price, that's kind of, and that would make sense because the market's been open 52 days, but that's where the year-to-date volume-weighted average price is. So this might end up being an important level. We'll see, but for now, on the intermediate term, we came in this week thinking that it had the possibility of a breakout. It looked good for a bit, but obviously it failed, and you can either listen to the message of the market or disagree with it, and and fight and fight and fight. And as I like to say, if they don't scare you out, they will wear you out the way they did with Bill Ackman. If they didn't scare him out on the way down, it's reported that his average price, or where he first started buying it, was up in here, and he got out this week at $11 a share. Certainly a lot of mistakes made there, and we all make mistakes, but what we want to do is make sure that we're not the ones that are holding as it begins to decline, because it could just take forever to get your money back, or you might end up puking your position out at the bottom after a much bigger decline. Shares of the bonds, they were up a little bit this week. They, as we know, last week undercut this low, and now we're getting a little bit of a bounce, but we're still in a longer term decline, with the longer term, the 50, 100, 150, and 200-day moving averages declining. We're getting a bounce within it, a downtrend, but back to what I just said about Valiant, that if they don't scare you out, they'll often wear you out. This is kind of what defines the range that they're in. Perhaps we get up towards that 120 level next week, but it's a range-bound market. It's not a trending market. It's range-bound right now on the daily time frame, and longer term, it's still in a downtrend as we made a lower low this week. Now taking a look at some individual names this week. Next week, here's some names that I'm going to be looking at. Nike looks like a good setup. Nike broke this longer-term downtrend on the weekly time frame, and it's holding this level here as support right now. Looking to this daily time frame, you can see it's consolidating in here, and we can go down to a 30-minute time frame to get a better feel for that action. So when we look at this daily time frame and we look at, for instance, this area, what we're doing is just taking a 30-minute chart and blowing it up, and you can see that's this area within the circle. So what we were actually looking for, subscribers to Alpha Trends today, was a rally up towards that peak to pull back and then to get going. I think that next week, if you see this above $58 a share, with a worst case stop down at maybe 53.70-ish, I would probably be more inclined personally to put a stop closer to the rising 5-day moving average. But it's definitely a stock, Nike that is, that you want to keep an eye on for next week. Amazon is building energy here for a potential continuation higher. It's done nothing for the last couple weeks, but it's building energy. It has this pullback low. It has a higher low and another higher low, and it's been working away at this resistance. So buyers are getting more aggressive price-wise, and the time in between is more frequent. So they're getting more aggressive time-wise as well. So breaking higher should continue to lead to new all-time highs in Amazon, and I would think a stop would go underneath the most recent relevant higher low, which to me would be this low right here. C-Trip is another name that is consolidating here in a nice tight range. We can see that it's making this little bit of a pennant here after this big move up from this resistance. And going back to a weekly time frame, here's a weekly time frame for C-Trip. You can see there's 26 million shares that have been short and not covered. In order for them to get get out of that bearish position, they do so by buying the stock. And if they were to buy 26 million shares, it would take 6 days of average daily volume. That's a short interest ratio. So that could definitely add some fuel to the upside here. This stock, we'll be looking to trade this at some point next week on Alpha Trends. I'm not sure the exact level. Maybe it needs to break above this little band of resistance here, but I would think a stop would go just underneath this level here. FedEx is another big name that looks like it's it has been consolidating here for the last for the first quarter of the year, and it's building energy. Perhaps it's started to move here today by making that higher high. So a stop under here looks like FedEx has the opportunity to be able to continue to move higher. GME is a name that on the short side still looks interesting to me. I didn't get involved in it this week, but longer term, you can see we're in this downtrend. We're being rejected at that 40-week or 200-day moving average. Then on the daily time frame, if you take a look at what's the psychology since this gap lower in November, well, there it tells us that the volume weighted average price from this level right here is now holding a support, but it's being tested. We've got a declining 10, 20, and 50-day moving average. Like any form of support, the more often it's tested, the more likely it is to fail. If we take a look at a volume weighted average price from this low, you can see we're battling in there as well. So going down to a 30-minute time frame, I think that what we really need to see for this to be a stock to become a short is we need it below $24 a share. At this point, the stop would go up here near about 24.80, but it depends on how it triggers as well, and that's what we talk about every day in Alpha Trends. NTAP has been consolidating in a pretty tight range up here in the daily time frame, maybe getting back above this level, which makes a higher high above a flat to rising 5-day moving average. It would be good for continuation with a stop underneath the low from this past week, or even just right up under here. Where you choose to set your stop is up to you personally based on how long you anticipate holding. For swing trades, I think these are the levels that should be considered. For another stock that looks like it could continue is AT&T. It had a big shakeout last year, and it's fully recovered from that. That prior support resistance has held as support. On the daily time frame, we can see we're building energy here as well, and it might be as simple as just buying above the high that it saw this week right here, and this is again a 30-minute chart. So perhaps just buying above that level with a stop underneath either this higher low, which is probably right down near 42.30ish or so. It's not a whole lot of risk on a 40. If we're buying, let's say 42.70 and putting our stop at 42.30, that's 1%. We've got a rising 10, 20, and 50-day moving average. We've got a rising 5-day moving average. The stock is consolidating and hitting away at that resistance. So it looks to me like a pretty obvious action point. We spoke about the possibility of Tempur-Pedic being a short this week. What we were looking for, if you recall, was for a break below the lows of last week before we initiated. So there was no reason to be involved in this stock on the short side. The volume weighted average price from this gap lower is right below this stock right now, and the weekly, as we discussed last week, is we've got multiple years of people who own this at a loss basically, and that prior support is acting as resistance. Still not ready for a short position, but I would say keep an eye on this one next week. Right now it's going to have to do something maybe like this: drop down, rally up, create a lower high, and then that 5-day moving average comes like this, and then we would short it right here back on the way down. We don't want to short as it breaks this level if it's extended when it gets there. We'd rather see it bounce short on the momentum lower with a stop above whatever the lower high ends up being. We also spoke last week about Win, and this stock had a great week. Hopefully you got involved in it. There were opportunities to get involved besides just owning it prior to that gap. Another name I'd keep an eye on next week would be Viacom. Viacom, you can see, underwent a beautiful stage 2 uptrend, higher highs and higher lows above a rising 10, 20, 30, 40-week moving average. The moving averages crisscrossed. That was distribution. Then they made lower highs and lower lows below those declining moving averages. And as I always point out, with a declining 40-week or 200-day moving average, it's still guilty till proven innocent until we start to see it flatten out as we're seeing right now. And we're seeing a tighter consolidation in here on this weekly time frame. So perhaps we're getting ready for a test of this upper level of what's been resistance for the last year and a half. That would get the stock up near $47 a share. So certainly worth a trade if it were to do that. And right now in the 30-minute time frame, it tells me it still needs a little bit of work. What I would probably do is maybe set an alert near $44 a share and then begin to watch it a little bit more carefully. Anyway, that'll do it for now, and hope everybody has a good week. If there's anything here that doesn't make sense, every other week for Alpha Trend subscribers, we do a live webinar, and that's when you can ask any educational questions, and also that's what the chat room is for as well. So have a good weekend. I'll talk to you next week. Thank you.